Hello, everyone. Good morning, good afternoon, and good evening. This is your boy Pedro. I'm back with another video. This time is a video on Forex. As you can see, introduction to Forex. This is kind of introduction, but it's not at the same time. I know it's confusing, but it's not. So the video is normally for those that are taking signals. Okay, for those that are taking signals, I'm gonna show you what to look for. So I got a long course, very long course. So if I say to bring it to do the entire course, it's gonna take a long time, which I'm gonna finish, but the course is finished, but not the videos. The videos have not finished yet. So this one is going to be for the people who are taking signals, okay? So I'm going to show you a couple of things to look for when you see the signal. Instead of you just taking every signal you get given, you have to learn to do your own analysis and try to see if you can take the signal or you cannot take the signal. But before we continue, you know the disclaimer. So read it and keep it in your mind. Know that nobody's telling you to trade or to do anything, okay? So guys, this is gold, okay? This is gold, as you can see right here. Well, it doesn't matter the pair, but this is gold. I'm just gonna show you a couple of mistakes that we are making when we're taking the signals. This is my chart right here. This is the gold chart. This is the 1 hour, the 1 hour time frame. Okay. But normally we trade on 15 and 5 minutes. As I see the signal come, I can tell. So for example, you must remember the candles that you get, the candles, the reversal candles, the continuation candles, and so on, the engulfing candles and everything. So when you get given the signal, you have to know where are you in the market? Are you at the top of the market? Are you at the bottom of the market? Are you in the middle of the market? So don't just take the signal for the sake of taking it. Me personally, I trade only M's and W's, okay? Not just that, I take M, W, V, and A. Those are my trades I normally take. So what do I mean about that? So this is the 1 hour, chart, 1 hour time frame. Okay, this one. But let's see what we did wrong last week when we were taking signals. We did something wrong on this gold signal, which was on Wednesday. Today is this was Friday, this is Thursday and Wednesday right here. You guys can remember here, your stops got hit. My one got hit as well, somewhere here, and I took the buy. I write this thing up, okay? I did write this thing up, but many of you were scared to get in, as I know, because you actually don't know what's going on. So I'll show you what I do when I'm trading. This is the way my chart look, but I have another chart that has other indicators, okay? So I have other indicators that I look for. So the I'll put the moving averages so you can see the free moving averages that I use to trade, okay? So 50 EMA, I normally use 50 EMA, which we call the water. I use 200 EMA, which they call the mayonnaise. Okay. I use 200 EMA right here. Just bear with me, guys. You will know what I'm talking about. Then I use the 800 EMA. Okay, these three EMAs are very, very important. Where am I again? Insert right here. I mean indicators right here. Moving average and 800. As you can see, you put it at exponential, apply to close, then you choose the color. Normally, these are the colors I use. Dark blue, I think we go for. And obviously, you put it a little bit bigger, like here. And the same as here. Choose number 2. So we can have the difference. So we can be able to differentiate between other. These ones are just my Fibonacci stuff. So this is how it looks like. So when I got into the 15-minute chart, this is what I was seeing on that day. Okay. This is where it was. And we had a signal to sell right here. Okay. To sell right here. I was doubtful, so I didn't take the sell here. I waited a little bit until I saw this one, which obviously was wrong. So as soon as I got here, now I think as soon as it hit the EMA 50, I got out and I start checking. I start checking right here. And I was thinking, this is the head. We see shoulder here. We see another shoulder here. But at the same time, because we were still on downtrend, what I didn't count, it was the levels, because market go down 3 levels. Okay. So if we push it this way, for example, we're going to push it this way so we can count the levels. Look, if we count this as 1 level and this one is 2 level right here, and that is the 3rd level. So on the 3rd level, normally you can sell and buy at the same time. So you could buy right here and take profit at the 50 EMA, then sell again at 50 EMA, hoping it's gonna continue down. Or whenever you see the signal to buy, then you can close that trade, then enter the buy. So here we have the right way track here. Look, the right way track that became the head. Look, this is right way track right here. Right way track means the candles are almost the same level. They look exactly like the same. Obviously, one of them, this one looks like a little bit bigger, but if you look at them, you see them, they're kind of the same size, both of them. Okay. They look like the same size. So this is right way track, is a reversal signal. Okay. Especially when the market has been going down for 3 or 5 days, you already know. So it's been going out for how many days? 1, 2, 3, 4, 5, 6, 7, 8 days. So right here, we should be looking for the buy signals instead of continuing to sell. Obviously, it might be trending, but it's pretty much rare. But sometimes, like the way we've been seeing USD CAD and Euro OD, most of the time they've been going down, like all the time they're going down. They're not showing any sign of reversal. But in this case right here, I did see other groups gave a a buy signal right here at this level. I just watched it. I was like, no, bro, it's not ready yet. And I kept watching it. I think right here, I did sell somewhere here and made some profit. Then we continued in our group. We did get, I think, a sell signal here. I think so, if I can remember. We did, and we got another sell signal here, which we took. Some of them took, and we lost. So here we got our stops got hit right around this zone. Some people had it too high. Normally, my stop loss only goes above the EMAs. So if I'm selling right here, my stop loss will go above EMA 50, because if it's already crossed EMA 50 for me, I know it's going different directions. So why am I going to wait for stops to go all the way high to lose more? Because what you don't want to do is lose more, so you can have a lot of work to gain back whatever you've lost. If you are wrong, just get your stop loss to get hit is fine, and reanalyze the market. Then you can enter again. Okay. So you can make your money back what you lost. But if you lose a lot of money, you are just reluctant to get to be stopped, because the stop loss is there to protect you, to protect your money. You're supposed to accept it when you are wrong, because right here we're going down. All right, you can think the market is going down, and it gives us 2 pins at the EMA 50 right here. 2 pins, 1, 2. Okay, we sell, which is wrong, but when it was here, that's a good sell right here. 2 pins at the EMA 50, you sell right here, you sell. Okay, good sell. And I'm not sure I traded it because it was on Friday. Not every Friday I trade, depends. The signal has to be really, really good. Right here, but I know in the group they killed it that day, that Friday, they really killed it right here. I was just watching it. I wasn't in it, but people killed it. But here we get 2 pins. By the same time, we already had the railway track here telling us for the market is reversing. And you can see here it open up. So you know the market is already ready to, obviously there are other signals that we look for, but from here you can tell the market is getting ready to reverse. Even though it gives us 2 pins here, I can sell, obviously, yeah, I can sell, but my stop loss is not going to be all the way here. No, my stop loss has to be just above this 50 EMA, because if I'm wrong, if the market is already above this 50 EMA, it closes, that's it. The market is going up, and you know you are wrong. So why are you going to stay too long? Why are you going to wait to lose? Because many people I see sometimes they will take a trade here and put a stop loss above the above. That's 123 pips from your entry. So there's no point to do that. So if you go here, you will see what I'm talking about. This is the EMA. The EMA, I mean the 15-minute time frame, okay? So if you get in here, look, these are the 2 pins that on 1 hour, they were in the 15-minute, but in this one is in the 200 EMA. I mean, if you are here, you enter the trade here, your stop loss has to be just above this zone here. If you are wrong, the market comes all the way back here. That's it. You get kicked out, and reanalyze the market so you can enter the other direction, or wait for the market to work its way, give you another signal, then you can enter and make your money back, instead of you going all the way like yesterday high, which was here, and you wanna put your stop loss all the way here. That makes no sense. It's too much money you're losing. Then you're gonna struggle to make it back, especially if you don't know what you're doing. Okay, if you don't know what you're doing, you cannot be risking too much money. You understand? So that's what I wanted to tell you guys that are taking the signal. So you have to remember, when you see head and shoulder, things like this is inverse head and shoulder. You can see, because you see here, the market ends here, it comes stop hunt here, it creates a good W right here, good W right here, because if you go right here, you'll see the W is here. Look, that is a W, good W right here. And it came back without coming back to the low. It just stayed at the same level as this one here. You understand? Without even retesting that low. Look, that's where it stopped and start going back. And we kept on selling in this zone right here. And boom, the market just went back, hit us really bad, because we didn't pay attention to what was happening around us. Okay. So when the market is up, it's down, you have to pay attention to what it's doing. What are the signals happening around? What type of setup that it's making around this zone? Okay. The same way, if it's up, you have to look for the signals to find out. The same way I was talking to you about the candles. Look right here. Obviously, it was Friday again. I did sell here, but I went out very quickly because I did see the candles here, the reversal candles. Look right here, inverted hammer right here, or a hanging man, whatever you want to call it. That is entry signal right there. You can enter there and boom, easy money. If that you missed that one, the other signal was right here. Look, another hammer right here, inverted hammer, right at the EMA 50. The EMA 50. It closes, you get in, sell, and your stop loss just above here, 25 pips, and boom, another 196 or 200 pips almost. Easy. But obviously it's Friday. I normally took my profit around here. I didn't even wait. I did put my stop loss just here. My take profit at 50 pips just right here. So I missed all this only because it was Friday. Okay. I wasn't gonna give all the gains for the week, give it back all on Friday. No. So I don't do that. That's why I sometimes miss a lot of trades on Friday. But this is what you guys should be looking for. So if right here you get given a buy signal, you have to look, okay, what are we buying right here? If there is not any way for you to enter the buy, then you shouldn't take the buy, because there is not any signal to buy, but there is signal to sell. The candle is right there telling you sell. The candle is right here telling you sell. But some people were taking buys from here. Okay, they were taking buy. But then it goes 17 pips up, then it start going down because you didn't read around here to see the signal, because there is M right here that is formed. I already told you I trade M, M at the top, W at the bottom, and A in the middle. This is like A in the middle, and V and in the middle when it's going up. Okay. Next video, I'll show you other signals, that other examples, but this is what I'm talking about. Okay. So you guys have to remember that don't just take signals because it's a signal. Like right here, look, this is perfect W right here. That was what date? I think December the 1st, right? Yes, December the 1st. I'm not sure I was trading. It's another Friday right here. It's another Friday. But look at the signal. Like crazy. 300 pips, 350 pips with a stop. Like it's been going, boom. And continued on Monday, then drop. Okay. So you guys have to know what you are doing instead of just taking signals on your phones. You don't read the market, just take signals on your phone. It's not worth it, okay? I never seen people become rich just by taking signals. You have to learn how to read all these charts on your own. So even if you get signal, it's just to remind you, okay, read this chart. I'm thinking like it's going. If someone tells me, okay, sell gold, when I come here, I'll just come and check. If I'm right here, someone said sell gold, I'm not gonna sell right here because I'm thinking, nah, this market is not ready to sell. But when it's on the top here, and I see this candle right here, the person tells me sell, I'll come and read this. I'm like, okay. There is a candle there that is reversing, so I'm gonna sell. Even if I don't sell here, I might sell here, this confirmation. But obviously you will suffer another 30 pips, 34 pips of stop hand. Then you make money, okay? But the ideal place, you see this candle, just sell, sell. If you cannot, it's okay to enter here. You just have to be patient to make the money, because like about 34 pips, because your stop loss is gonna be around here, like above like 10 pips above the top, okay? So it's around 40 pips stop loss. But then you make 130 in less than an hour, so that is like triple, more than triple. That's what you want. You want to lose 40 pips, but when you make 120 or 130. That's good. If you lose 30 pips, when you make your money, you want to make 90 pips at the same size you're trading, okay? If you take in one standard lot, you lost around here, let's say about $400. When you're gonna make $1,200, then you've made 800 profit. Okay, that's what you want to do it. That's how you want to manage your account. Otherwise, you're gonna blow the account. All right. So I'll see you for the next video. This is what I wanted to share with you guys. Take care. See you for the next video. Bye.